Hey guys, welcome back to another crypto this week on your favorite crypto channel, Crypto Adnan, with your favorite host, Adnan Arif. Guys, it's oh my god, I love doing these live streams. It really really excites me. Like, hey guys, like honestly, it's I do appreciate everybody showing the love, whoever's come in, whoever's joining in later. There is a little bit of a lag. Anyways, without further ado, I just want to address one thing though. Last Friday, we did not have a live stream because there was a conscious decision made on the fact that, hey, I will be doing a live stream every Wednesday, and that's basically what is gonna be happening till the end of this year. Every Wednesday at 8:30 p.m. UAE time, I will be going live to talk to you about the whole last week's crypto news. And just wanted to make sure that it's easily accessible for everybody. Like, didn't want someone to take our time on the busy Friday night. I understand how important weekends are. I just wanted to just be easy for everybody to come and join in. Anyways, guys, without further ado, let's get started in today's show. All right. Okay, just give me a second, guys. We're having a little bit of a technical difficulty. All right, guys. So as you can see for today, the agenda is a banger. There's a lot to talk about. We're going to go through the market watch, the top gainers, the top losers for the week. What has happened with September being the worst month for the market. And, generally October is known as Uptober. So are we looking for the same Uptober gains as last year? And the next bit I want to talk to you about is the financial crisis. Are we headed for another 2008 financial crisis? There are quite a few points that I want to show you guys and take you through some important information to just help you understand where we are in the market, so that it really helps the sentiment that's out there. Okay, apart from that, we've got a lot of 34,000 Bitcoin was, that's the headline. I'll not say anymore. Lehman Brothers 2.0, again, connected to the financial crisis. Are we headed there? Finally, after that, some good news with McCrypto. And then what are the Tether reserves? And I do apologize, it's not actually XRP lawsuit, but it's an XRP update. All right, so with that started, let's get into the market watch. There you go. All right. So for the market watch today, we've got, I hope everybody can see this. Just let me confirm that. Yeah, all right. We're having a little bit of technical difficulties today, but bear with me. All right, so as you can see on the top left, my bad, we've got 21,200 cryptocurrencies, which is, it'll always keep increasing. Again, as I mentioned, like I could see only 300 to 400 cryptocurrencies that will ever actually be the winners, in the long run. So keep your eyes and ears open, eyes open and ears open as well, I guess. Exchanges, 527 exchanges, market cap of $957 billion. Okay, let's have a look at the market cap real quick. Okay, I'm just going to quickly reload this as I try and come as prepared as possible, but obviously just wanted to see if it's what's the latest for you guys. Always the latest for you guys. Okay, Where are we? Okay, so market cap according to the last 7 days. Let's see, it has actually picked up 942 billion to 960 56 $59 billion. That is yeah, that's there has been a lot of price action movement in the last couple of days with Bitcoin. At least it's been breaking above 20,000, coming down. We're going to talk more about Bitcoin. We have a proper section on that. Yeah, let's move back. What else do we have? 24-hour volume, $58 billion. That's not bad. If you see, that is about roughly 6.5% of the total market cap, which is not bad. Bitcoin dominance and ETH dominance. Let's have a look at that in the charts. Wait. Okay. There you go. Let's have a look at it from a 7-day perspective. Bitcoin grew a little bit, obviously, with the prices going up a little over the week. It did shoot up to 52%. That's when the Fed emergency meeting rally kind of happened, or just post that, and now sitting at a healthy 40%. Ethereum, let's have a look at Ethereum. Ethereum 17.33 to 17.212%. Again, dropped a little bit, not too shocking, to be honest. Again, Ethereum still feeling the burn from moving from proof of work to proof of stake. Okay, let's have a look at Bitcoin then. Bitcoin. Okay, Bitcoin. Bitsy with Bitcoin. All right, so Bitcoin has had a pretty decent movement. I mean, an okay-ish movement. Starting at like about $19,560, went all the way up to $20,300, and now is sitting about at $20,100-ish dollars. Again, there's a lot that can be said about Bitcoin and its price movement, but guys, you need to understand we are going to see sideways action for 18 months. Expect it. There is going to be sideways action. Don't try and trade in the short term. It's extremely risky. I still do think that Bitcoin can pump a little bit up, somewhere on the levels of the 22, 23K, and then drop back down under 20. I do have some buy orders at 17,000 set up for Bitcoin. Definitely, if it's going 17K, gonna buy. I have another level at 15, at 14, and at 13. So I'm not saying that it's gonna go down to those levels, but just put in some buy orders at those prices, because honestly, there's a lot of market sentiment. There's a lot of this thing that we're going to talk about in the financial crisis section. So yeah, stay tuned. Okay, moving on. Let's look at the top gainers for the week. Do I have that tab open? Let's see. Give you a little bit more screen real estate. Okay, in terms of, I thought I had that open. Okay, in terms of the top gainers for this week, we have Elrond. Wow, pumped up 20.19%. Let's have a look at that. Why is it pumped 20.9% in this week? Wow. Big jump from 46.50 all the way. It went up to all the way to 56.50, like $10 jump in Elrond. Oh wow, and quite a big of a bump. Interesting. I'll keep an eye out on this and keep you guys posted on my Twitter and my Instagram for live updates. Guys, again, we are having a little bit of a technical issue because you should be able to see my social media handles. And there you go. Now you can. Okay, so social media handles in the link and the graphic below. Yeah, guys, just follow my Twitter and my Instagram to get live updates. Okay, moving on. We have also Maker and reserve rights. Maker's pumped up 15%, reserve right 14.14%. Okay, wow. Reserve rights. If you didn't know what it is, it's a reserve rights is a token, is a utility token and enables holders to vote on governance proposals for its protocol. One of the clear reasons for this bump in price is the fact that its mainnet is scheduled to launch very soon. So keep an eye out on reserve right. Again, I don't have any price targets, but if you guys want me to kind of set some price targets for reserve rights, please do let me know in the comments below. Polygon pumping up 13.49. Oh, we should be on this again, guys. Second live, so I'm still getting used to the controls and everything. I promise I'll get better. Okay, so we have Polygon pumping at 13.5%. Fantastic to see Polygon. I really do think Polygon's like price targets for the next bull run would be about 7, 8. I would say $18. Again, I have been told that there is okay. There you go. It's fixed. Thank you so much, Manu, for the WhatsApp message to let me know that there was an issue. Okay, cool. Moving on. Quant is doing well. Quant small. Good morning, sunshine. Hey, Google. 13.4%. Quant. Okay, Quant is doing very well actually. Why is it actually pumped up? Several makers of the activity on the network have increased during volume daily active. Okay, including volume daily active addresses and whale accumulation. Addresses with over 100,000 have accumulated 15.4% more QNT to their holdings in the past 5 months. Wow, this is a very bullish thing for Quant. It's in my portfolio. It's one of the ISO 2022 coins. Yeah, we discussed about these coins last live, so go do check that out as well. And I will be doing a detailed video on those coins this week. Okay, moving on to our next top losers for the week. Let's have a look. Oh, we have Chili's down 13.64%. If you guys do remember, last week Chili's was actually on the top gainers for the week, and oops, sorry guys, we're having technical difficulties. This is yeah, so Chili's was actually doing the top gainer from last week's video. Sad to see that they have dropped down 13.64% to 12.17. Let's have a look at that real quick. Why has that happened? Yeah, so you see here, it was a quite good price It was almost at the price that I is my average, and now dropped back down. Chili's again. I'm very bullish on this coin. Definitely fantastic use case. It's the bear market. Let's not pass judgment on this already. 18 months. Let's see. Big hopes with Chili's. IOTA, MIOTA. Okay, guys. I don't know all the cryptocurrencies out there, but let me just quickly search what IOTA is doing. IOTA is a smart contract platform designed to handle payments and other transactions between physical devices that are connected to the internet, like IoT. Okay, like Internet of Things devices. MIOTA is a cryptocurrency token used by the IOTA platform to facilitate the transaction. So that's their cryptocurrency. Okay. All right. So apart from them, we keep an eye on these top 100 currencies and see what movements and movements are being made in the market. Let's just quickly see the top 10. Doge is still in the top 10. Solana, Doge is just there. Doge has actually picked up quite a bit. Because if I remember last week, Doge's market cap was 7.9 billion. And it's just pumped up to 8.5. Like, good kudos, Doge. Still not investing in you. Then, obviously, from the top, we got Bitcoin, Ethereum, USDT, BNB, USDC coin. Okay, XRP. Not much movement in the top 10, guys. Not much movement in the top 10. But keep a close eye on this. Doge, Polygon, Polkadot. Very close for top 10 for the 10th position. All right, now let's move to Uptober. Okay, so if you're new to crypto, you know that, or if you're new to the markets in general, you know that September is, in general, the worst month for every market out there. It's something to do with the end of the Q3 and the beginning of the Q4, where companies. It's a bad month. But what follows after that is October. Okay, October is generally where in the Q3 or Q4, the beginning of Q4, companies have to spend their budgets, and usually October has a pump. Followed by, obviously, you have November, which is generally also a bullish month, and we have December where it's the holiday seasons. The market sentiment is always high. Let me show you this article that I've come across. Okay, forget October. Crypto market remains at a risk for further losses. Guys, listen to this carefully, yeah? A new month is often accompanied by a positive social sentiment, fresh gains for assets. For Bitcoin and the larger cryptocurrency market, bearish blues are still playing despite entering October. It's not a surprise, guys. It's not at all a surprise. I'll explain why. Okay, let's just go down here. On a weekly chart, Bitcoin's price has been moving to a tight range between 23,700 and 18,800 since June 2022. The weekly RSI is showing no sign of a breakout as sellers continue dominating buyers. Okay, we're in the bear market. That's exactly why it's not a shocker. We are in the bear market. What do you expect? See, guys, we cannot actually count on a monthly trend to hold. Your September this year, your October this year was gonna look so much more different from your October last year. And the main reason why is last year we were in a bear market. So sentiments are high, people were very bullish, there was a lot of money in the market, there were no other macroeconomic factors that were coming into play, and everyone was on the up and up. Fast forward 12 months later, we're in a bear market. October does not seem like it's going to happen. Bear market rules, you can't really expect in a bear market to see a monthly trend actually still happen. And I'll show you this sign, I'll show you this chart, yeah, and I'm going to explain further on this chart. This one, okay. That said, the correlation between Bitcoin and equity prices, especially tech stocks, has noted steadily growth. Macroeconomic concerns around inflation, geopolitical climate, and monetary policies have left Bitcoin prices down, thus affecting the broader market as well. But guys, we know this, you know. So we're talking about the stock market has taken a dive. September, bad month. Okay, macroeconomic concerns in terms of inflation going up, the Fed raising interest rates. So what that means is basically, if you have if you're taking out money or borrowing money to pay for a home loan, you have to pay a lot more in terms of your interest. So you know it's actually taking out a lot of market money from the market. Yeah. So it's not a big surprise, but have a look at this, guys. Okay, I hope it is clear. It's a little pixelated, but basically what this is just showing which months of which year are green and have been green and have been red. Okay, now if you look here, we are 2018 October was a red, 2019, 2020, 21 were in the greens, kind of because we were in bull market cycle. Yeah. 2014 in the red, 2011 in the red. So you can expect this to stay, that your October is going to be bad October. That's a very bad pun. Bad October, but it's going to be a very bad month. Or a bad month in general. If you look at it, Feb has actually also been a very good month for crypto in general. You know, a lot of greens over here, and followed by October. So, guys, you cannot expect the market to continue a month-on-month trend every year, but you have to look at it from every cycle. You know, how the cycle, where are we in the cycle? Are we at the starting of the bull market? Are we at the middle of the are we at the starting of the bear market? Are we in the middle of the bear market, or are we actually going to see the start of a bull run? All of these things will predict will help you better gauge if the month-on-month trends, or month by month, or month every year trends will continue. You know, we need to know that, you know, as we get closer to the holiday season this year, we'll actually know how bad the crypto winter is. You know, my only concern, my only feedback to you here is approach this month with caution. Be vigilant, you know, approach this month with caution. Don't let your emotions get the better out of you, but look at the markets and see what the markets are doing and base your decisions on that. Quite a bit. All right. I hope you guys are doing well. I'm just gonna have a quick check and see if the chat is going on. Hey Faraz, thank you. Hey to Hina. Hey to Asna. Hey to Ramiz. Thank you, Asna, for the good job. And Ramiz to the moon. Thank you, guys. Okay. We've got quite a crowd here. Okay, now the next thing that I want to talk to you guys is the financial crisis, guys. This is serious stuff, okay? We're entering into one of the craziest moments in economic history. Equity indices broke their June lows by this week. Comparisons to the great financial crisis in 2008 are becoming more and more strikingly resemblant, with the SPX closing not one, not two, but three red quarters for the first time since that period, which is 2008. The Fed is just ramping up on the Fed is just ramping up on its quantitative tightening measures, aka interest rate hike. Yeah, sovereign debt is becoming a full-blown crisis. the OPEC is cutting down on the number of barrels that it's going to produce, hence raising the oil prices. Inflation isn't going anywhere, guys. As much as we would want, as fast as we would like for it to like get out of here, inflation ain't going nowhere. The euro and pound are diving like Sergio Busquets from Barcelona, you know. And now Putin is talking about like crazy talk and about his war with the West. So where does this all leaves us? You know, it's a really serious time right now, guys. All these factors, you know. Also, one more thing: the UK pension fund. Forgot about that one. The UK pension fund almost got a margin call, but what does that mean? It basically means like your grandmother's retirement fund almost disappeared, you know. And this is setting for an absolutely brutal next leg to this bear market. You know, it's only gonna get worse. It's only gonna get worse, and I will prove it to you why. I mean, I don't want it to get worse, but the signs are there. Okay. Okay. Yes. Here, let's have a look at this chart. Okay, this is the S&P 500 index. Okay. Now, yeah. Just see. Okay. So looking at this, we have a little bit of a reversal from this downward trend here, but keep a close eye on this, because the S&P has SPX has closed 3 quarters in the red. We can see some action like this go down. Actually, wait, not even that much. We can see an action go down like this, and that will mean absolute catastrophe. Okay, guys, I've never been a great artist. So don't mind my drawing and on the charts. But yeah, that's, if this happens, keep a close eye on this. There's a very good chance that it can even just go back up and retest this level here. But in the case that it does fall down, it could mean that we are going to another financial crisis. All right. Next up. Oops. Where are we? All right. For the first time since GFX, the global financial crisis, that is, SPX has closes down 3 quarters in a row. Last time it did that, it closed. Last time, if you see here, 1, 2, and 3. Let me pull this image up. So if you see here, 1, 2, 3, last time I did that was in 2008 when we hit a financial crisis. Does this mean that we're going to do a financial crisis? It's just a sign. Be aware. But maybe the next one might make you feel that way. See, the market is going to be filled completely with these news. Okay, there's going to be the news these days happens so quickly, guys. As soon as I talk to you about something, it could be another news angle or another news stories come out and completely taking the market in the other direction. So just be extra vigilant. Drill this in your head that they're going to be fake outs and absolutely scam pumps and scam dumps. So be extra vigilant. All right. If you see here, coming back to this, sorry, yeah. So for the first time that we've had 3 negative quarters here since the 2008 financial crisis. I don't know if I think I did talk about this. Okay, could mean then we're going through another downturn as we saw in 2008. All right, okay, I think every link, I tend to keep them ready for the live. All right, Holger Zaspiat. I'm not following him. I thought I'm following him. Oh, all right. So if you see this chart here, oh, very interesting chart. Let me read his tweet out for you. In our weekly wealth podcast, Doozy, we argue about whether we will see a year-end rally in markets or if history will repeat itself and markets will collapse again in October as they did in 2008 during the global financial crisis. The chart of the chart of doom supports my bearish view. Must hear. Okay, go and hear his podcast, and very interesting person to follow. Go give him a follow as well. Definitely one of the people on Twitter that you should be listening to, or see what they have to say. Let's have a look at this chart a little better. Okay, yeah. So the yellow line is the S&P 500 from 2006 to 2008. You can see how it's almost mimicking the same pattern. There are some arguments in some places and stuff, but don't look at it that way. Look at it from, when in doubt, zoom out. So look at it from the bigger picture. And the white line represents S&P 500 from 2020 to today, 2 years, 2-year range. We're currently here. Looks like we will be heading for it's actually a very, very, very bearish chart, a bearish fact that I've put around here. It perfectly parodies the actual moves of 2008, the 2008 crisis, which means that we could be on another major leg down in this bear market. Ouch. Okay. While this reloads, hydrate. And guys, this has a lot to do with the Fed reducing its balance sheet. You see, the Fed has stepped up their interest rates earlier this year, and that was a way to increase the cost of money to smother inflation with one tool. Okay. They were buying stuff, meaning that they were putting money into the market, and non-stop throughout 2020 and 2021, they were printing out this money. Now they're completely reversing that and taking stuff out of the market, like increasing interest rate. So it really begs the question as to, are we going to reverse all the way down to where we were before the crazy great money printing of 2020 and 2021? Or like during the pandemic, or is it going to be a fake out? Are we going to go back there? I think that that's a fair target. Generally, but the point is that they're really stepping up the removing liquidity. That's what we need to look at. They've increased the interest rates now, and they're removing liquidity, and the two together are an absolute spicy combo. Like, definitely. If you look at this chart right now, the Fed balance sheet has shrunk about 2% this year, falling to 8.8 trillion from about $9 trillion. The balance sheet roll-off is accelerating now in tandem with the increasing volatility. Okay, that basically means with the insane money printing that they've had, the balance sheet has decreased. And now they're trying to remove that money out of the market by increasing the inflation. And both of this is a spicy combo. Like, it is massive. All right, next one. This one. And as Robert Smith of the Financial Times has said, jaw-dropping quotes on just how close we came to catastrophe today. This was on the 28th of September. Senior banker describing the leverage unwind in gilts as coming close to triggering a Lehman moment. Asset manager accuses the Bank of England to ignore calls to intervene sooner. This is a little funny. So basically, effectively, the moves by the Bank of England are triggering a potential margin call on pensions and pensions in the UK, which means that your grandma's retirement fund almost just got completely liquidated. This is not great, guys. This means banks are defaulting. Remember that. banks will be defaulting. What we just found out is that the Bank of England is turning back on the money printing to buy bonds to control interest rates so that everyone does not panic. And that, my friend, is the beginning of a pivot from at least the Bank of England. It's not really happened with the Fed or any other nation as of now, but you can see this is one of the reasons why the British pound has been completely on a nosedive. But one thing's for sure, once the Fed does pivot on this, many other countries will do so. And it's just going to turn on the tap. But guys, this only means that the pain is going to be, this only means that it's not a full and final solution. It's just a temporary fix, and the pain is just going to last a little bit longer, way longer. Next one, we have OPEC Plus to consider oil cut to over than 1 million barrels per day. Basically, they're going to stop producing 1 million barrels of oil per day. OPEC Plus will consider an oil output cut of more than 1 million barrels per day next week, in what would be the biggest move yet since COVID-19 to address the oil market weakness. I'm not going to read through the whole thing. Prices have nonetheless fallen sharply in the last month due to fears about the global economy and a rally in the US dollar after the Federal Reserve raised their interest rates. Analysts and OPEC watchers such as UBS and JP Morgan have suggested in recent days to a cut of around 1 million barrels per day was on the cards and could help arrest the price decline. $90 oil is a non-negotiable for OPEC Plus leadership, hence they will act to safeguard the price floor. Guys, oil is going to get expensive. We've had 2 good months for oil. Oil prices went down. And here, there's a big point on this, okay? We still have an energy crisis, and it's growing, with OPEC deciding to cut their production by over 1 million barrels per day. And German officials actually mentioning that there's going to be a significant energy shortage in the coming months. And which months are these? These are your winter months, which is where energy is required the most to keep your households warm. And this is, of course, because of the Nord pipeline, which was sabotaged earlier. And some officials say that it was Russia. However, there's a clip of Biden kind of saying in February that, if Russia does expand, the Nord Stream pipeline will not exist. Again, I'm not an expert. I don't have any kind of clue. But all I'm saying is that there's a huge amount of pressure on the energy crisis, which needs to be addressed. And we don't know where that's going to come from. And eventually this was going to affect the prices, the inflation, and will make a lot of things even harder for the central banks of those countries. Yeah, guys, lot of difficult times coming up. All right. Yeah. So I just want to talk about something a little bit more interesting, a little bit more positive, which is short-term bit of relief. You see that all the markets, including crypto, are currently sitting at generational support levels. Usually this triggers a technical rally, which means there's far too many things are being sold, and they bounce back and the markets recover. This is where we start to see handouts once again make their way into public banks, which of course could trigger a lot more short-term relief, even though it extends the pain. This is exactly what I was trying to tell you, and I just wanted to take a second to address this very much. Guys, the reality is that a rally right now would be super unhealthy for the market, and it would ultimately extend the situation, but expect the unexpected is the term in this, is the one rule now, and almost everybody is jumping on the bear train. I don't think I've ever seen a sentiment in the bear market as strong as right now, as it is right now. as the amount of negative news that you see from all sides, it just keeps piling and piling and piling up. And precisely, this is when you get these unexpected bumps and unexpected moves to the upwards that cause by maximum, and these cause maximum amount of pain. Again, my goal here is not to call short-term trends. In fact, I'm advocating that anyone with short-term trading, anyone not to mess with the again. Sorry guys. Again, my what I'm trying to say is do not mess with the short-term trend, because it's not an easy game to play. The goal here is to hang out, keep your portfolio safe, preserve your capital, and make and invest as soon as the market turns bullish, and that's when the bottom is formed. With that said, signs are pointing to a short-term relief rally are definitely possible, so keep a close eye on this. As I mentioned, the news these days is moving so fast because the markets keep pumping and dumping quickly, and there are a lot of fake outs. All right. Whew. That was a little bit of a rant. I think I should do like a rant section or segment in my live streams. Finally, let's move to some other news. All right. Over 34,000 Bitcoin left exchanges on September 30th. Whew, that is, I think, what's the math on that? Ooh. Is that 690 million? Yeah, that's about $690 million of Bitcoin. Investors withdrew more than 34,500 Bitcoin from exchanges on September 30th. This is one of the largest Bitcoin withdrawals from exchanges since the massive Bitcoin sell-off in mid-June 2022. This shows investors could get ready for the last quarter of the year with increased confidence, according to Sentiment, one of the largest market intelligence platforms in cryptocurrency market. Okay, Bitcoin saw 34,722 of its coins move off exchanges on September 30th, indicating that there may be a hint of trader confidence heading into Q4. The last time at least this much Bitcoin left exchanges was June 17th, when prices jumped 22% in the next 4 weeks. Again, what I just said was news keeps moving so quickly. The markets react even quicker. So you will see these short-term pumps and short-term dumps very quickly happening, and it's all fake outs. It's all fake outs. Just take a step back, breathe, do not react. Take a step back, repeat after me. Take a step back and breathe. Yeah, just breathe. Don't react. Eventually, long-term investors. Eventually, long-term investors that hold larger positions in Bitcoin are usually advised to keep their digital currencies out of exchanges, which is obviously, you should have them out of exchanges, not your keys, not your wallet. This is in order to keep control of their funds without having to rely on centralized exchanges. Therefore, the most recent withdrawal from exchanges could also be a sign that investors want to keep their Bitcoin secured out of these platforms. Oh, okay. So this could also mean that these exchanges are not competent enough, or maybe going through some liquidity or bankruptcy stages, and you want to secure your Bitcoin, which is fair play, guys. I would do the same. Keep your money out of exchanges, or if you're doing that, make sure that it's only with the most. Actually, to be honest, just keep it on a non-custodial wallet. Put it onto Exodus, put it onto MetaMask, put it on such exchanges, such wallets. Sorry, my bad. Just to secure your money. It's a very bad market out there. Everyone's going out for everyone's throat, and like everyone's crypto. So keep it safe. As simple as that. All right, moving on. We are running out of. We have 15 minutes remaining for this live. Another news that I just wanted to mention, it's not there in the agenda, is crypto's popularity among American millennials is on the decline. 30% of the surveyed American millennials say that they feel comfortable when distributing some of their wealth in digital assets. And an analysis carried out by the financial services company Bankrate determined that US millennials are not as enthusiastic about cryptocurrencies as they were last year. Oh my god, this is like stating the obvious. Okay. James Royal, the principal reporter at Bankrate, the company which conducted the study, reminded that around 50% of the US millennials felt comfortable investing in digital assets last year, while the figure has now shrunk to 30%. Like, duh, obviously, this year we have a bear market. So, not a lot of people are talking about it. Last year, your gym at the gym, I mean, people were talking about crypto. When you were in a restaurant, you could hear people talking about crypto. When you were in a coffee shop, you could hear the waiters talking about crypto. Some meme coin that they bought or whatever. Obviously, right now, markets are down. No one's talking about the markets because they just don't want. They don't see any gains from it right now. And it's just stating the obvious here, guys. Oh, God. Sometimes the news is just like BS. Okay. Lehman Brothers 2.0 situation may cause another catastrophe on the crypto and financial markets. Again, from the financial crisis rant that I had, there's quite a bit of news around what's happening, similar to the Lehman Brothers back in 2008. The black swan no one expected potentially appeared on the market after the crypto and financial community sparked a series of discussions about worrisome state of one of the biggest investment banks in the world, Credit Suisse, which could be dangerously close to defaulting, causing a massive crash on the markets. What is Credit Suisse? Credit Suisse is one of the biggest investment banks around, with around 1.5 trillion, oh my god, trillion dollars in their asset management. Which has not been in the best state over the last year. The bank stock plunged more than 60% through the year and tumbled to almost $10 from $10 to $3.95. Wow. One of the biggest banks. If they fall, this is like Lehman Brothers falling in 2008. Guys, be very careful. Be very careful. You know. How will this affect the crypto market? Okay, it's not a secret that Bitcoin and other digital assets are heavily tied to the performance of financial markets outside the blockchain world. The defaults of such a major bank would surely cause turbulence in high-risk markets, crypto included. Thankfully, over the last 4 weeks, we have seen a gradual decoupling of Bitcoin against indexes like S&P 500, which could act in favor of the blockchain-based asset in case of a major crash. I do think that if all the markets do crash, a lot of the confidence will come into the crypto industry, crypto market. A lot of the people will be moving the money from different stocks into crypto. So I do see that there might be a little bit of an uptrend, but again, it could be a fake out. So just stay vigilant. Stay vigilant. Staying vigilant in Uptober. Staying vigilant in Uptober. That should be your tagline for the month. Okay. What do we have next? McCrypto. Okay, McCrypto. Is this one? Yeah. Some good news. Okay, McDonald's starts to accept Bitcoin and Tether in Swiss town. Okay, McDonald's started to accept Bitcoin as a payment method in the 63,000 populated city of Lugano in the Italian-speaking region of Switzerland, which is becoming a hotspot for crypto adoption in Western Europe. In March 2022, the city of Lugano announced it would accept Bitcoin, Tether, and the LVGA token as a legal tender. On March 3rd, 2022, the city signed a Memorandum of Understanding or MOU with Tether Operations Limited, launching a so-called Plan B, According to this plan, Tether has created two funds. The first one is 106 million or 100 million Swiss francs investment pool for crypto startups. Wow. And the second is around 3 million or 3 million Swiss francs attempt to encourage adoption of crypto for shops and businesses across the city. We need more cities, boroughs, states, countries to have this plan B. Kudos. Okay, in addition to allowing Lugano residents to pay their taxes using crypto, the project will extend payments to parking tickets, public services, and tuition fees for students. More than 200 shops and businesses in the area are also expected to accept crypto payments for goods and services. My God, I want to move there. No, not really. But I want to see this kind of adoption all over. And what does this mean for the crypto market? It means a big boom. Wow. Kudos to the city. Definitely want to go on my bucket list now to go and see those guys and how they're doing it. All right. To our second last piece of news. Tether commercial paper exposure now under 50 million, says their chief technical officer. Stablecoin issuer Tether has nearly completely slashed its commercial paper holdings with less than 50 million worth of commercial paper units as of September 30th, 2022. Tether chief CTO Paolo Adronio, sorry if I'm butchering your name, man, made the announcement on October 3rd, tweeting in an October 3rd tweet, adding also that Tether's United States Treasury bills increased to 58.1% of its total portfolio, up 25.1% from its June 30th figure of 43.5%. Okay, what this means is commercial papers are short-term debt instruments issued by companies which are often used to finance various business operations, while treasury bills are claimed to be more stable than commercial papers as they offer zero default risk since investors are guaranteed to at least recoup their investment. The stablecoin issuer, so that means they're converting more of the commercial papers into treasury bills to be a lot more safer and secure. Kudos to Tether for doing that. Hopefully, they come up to 100% treasury bill, 100% owning in treasury bills. I don't think they can do that, but just for liquidity purposes, maybe an 80-20 split would be a lot more better. Okay, what do we have here? Okay, last bit of news. It's not the XRP lawsuit, guys. It's the actually XRP update. Okay, this is a little bit of a funny one, so I just had to put this in here. Ripple CEO targeted by scam accounts on Twitter. Okay. It's nothing new. Like, everyone gets targeted with scam accounts. There's a scam Vitalik. There's a scam Crypto Adnan as well. So many Crypto Adnan scams. Go and report each and every one of them. They tend to come up a lot on my Instagram. Anyways, Brad Garlinghouse, CEO of the California-based startup Ripple, called out Twitter for not taking more action against scam accounts, some of which are being verified badge holders. Okay, dude, guys, this is really funny. He says, I can't believe I'm still doing this. The CEO tweeted during directing his message to Twitter's support account. As per his tweet, Twitter has numerous various verified accounts that have been impersonating Garlinghouse and even replying to crypto-related tweets. It's so... Okay, by the way, all these social media accounts need to just really look at their privacy policies. It is ridiculous that they actually say that, hey, this is not violating any of Twitter's privacy policies. It's ridiculous because they tend to do a lot of scams. In a way, Twitter is maybe supporting these. I know the AI cannot detect everything, but that's why you have support tickets that you create. So finally, a human interacts with it and actually says, oh, yeah, this guy's a real guy and this guy's just an impersonator. I mean, any sane person who could just see it will know immediately. Or maybe